Good afternoon, everyone. It is Tuesday, February 17th. It's a few minutes after 4 o'clock. My name is Mark from Blunt House Technical Analysis, and you are here with another edition of Chart the Markets. And we're kind of at a little bit different a time today, so I apologize for that. I think I threw a lot of people in. You know what? Sometimes your schedule is what your schedule is, right? Let's get to the markets, because that's why we're here. And, you know, this is a real easy time to get caught up in mania, be it up or down, just getting caught in the blender. And sometimes when you're in it, it's really hard to get out. There's, times you're hoping that someone will just reach in and pull you out, but it just doesn't seem to happen. And why do we make these kind of mistakes? Why do we get involved in making moves or in making trades that maybe we shouldn't make? I think it comes right back to the discipline and the professionalism that you need in order to keep yourself honest and keep yourself on the right path and to keep yourself focused on the things that are important to you. And no, it's not just making money, right? That's not it. The ultimate job is to monetize the chart, but you can't do it with a damn the torpedoes type of attitude. You are not missing anything. Rushing to make trades or not thinking them all the way through. You're not missing anything. There's no need to rush. So what do you have to do? You have to put some structure, and I'm going to keep repeating this. You have to put structure around your process. You have to put structure around how you trade. And what can you do to start doing that? Well, first off, pick a handful of things, and I mean one handful of things that you want to trade. No more. Is all you have to do is be very, very focused on a few things, and at any point in time, if someone was to say what's going on with ABC on the 4-hour, you'll know. But don't try and trade too much. What else can you do? Let the market come to you. What do I mean by that? Well, for those of you that are just focused on trading long, you're going to get frustrated in trends like this, because there's not a lot for you to do, right? So what do? You get impatient. And when you get impatient, you try and make trades that have low probability of succeeding or a lower probability of returning the kind of ROI that you want. That's what's going to happen. So let the market come to you. If you're only going to trade long, then you're going to have to wait for the market to tell you that maybe it's time to go long. Obviously, right now, that hasn't appeared yet. The reasons why are irrelevant. Sell, still in the trade, as long as you're not overly leveraged and you haven't been stopped out. The only way you're going to get knocked out of that trade is A, hit your target, or B, get stopped out. Now, I know that sounds really easy. Well, that's because it is. We make it harder for ourselves than it needs to be. So slow down. Speed kills. Slow down. Don't be in a hurry to put money in play. Do your homework, right? And that's not that hard if you're only trading or only focused on a handful of symbols that you want to trade, regardless of what they are, because you're going to be uber focused on them. So don't stretch yourself too thin. Don't make the job harder than it needs to be. Don't take too much risk and extend the time frames. These are the little things that you can do to put some structure around your trading. What else can you do? Take your money. I can't stress this enough. This is not a home run derby. All right? It just isn't. It's not a home run derby. Right? It's not. This is real money, real markets, real lives. It's not a game. So treat it with the respect that it deserves, and it will do the same, right? Your hard work will pay off. But getting back to taking your money, instead of swinging for the fence and looking for a gazillion return, start taking money in increments so that you're not as taxed worrying about what's going on the chart at any given moment in time. Does that make sense? So instead of waiting for massive returns, just take your money more frequently and let it become robotic. Right? So what does that look like on the chart? Well, and again, this is all part of our script, so let me just drop this down. This is a 1 hour chart. Now, I've left these on so that they don't disappear after they've been tagged, but what I'm trying to show you is, if we look in the middle of our screen, there's your sell signal. There's your stop loss, not hit. There's take profit 1. There's take profit 2. In this case, you probably would have been stopped out if you were mitigating your risk. And that's okay, because that's 40 points that you took. You could be running a trailer. So take your money more frequently and get used to doing it in increments. Here's an example of where you triggered a buy. Take profit 1, take profit 2, take profit 3, you hit them all. Congratulations. It's not always going to work out that way, but the point is, what are you doing? You're taking more of your money, you're taking your money more frequently, so you're banking more and you're losing less. That shouldn't be that difficult. The only thing that makes it difficult is the inability or unwillingness to be a little more modest, right? Slow things down. Just chill. But I think there's just so much mania in this market. There's so much group speak, so much talk of wonderful things, terrible things, everything in between. Markets are going to go crazy up. No, they're not. They're going to go crazy down. And you're there in the blender. Block out the freaking noise and focus on the chart, okay? Everything you need to know is right in front of you. Nothing more, nothing less. And we've been walking through this Bitcoin chart forever, just as an example. And everything you see on this chart right now is all part of the system that we use here. Our Blunt House TA signals is this, and of course it's packed with a whole bunch of other stuff. This is a go-no-go oscillator that I've just recently put on the chart, and that's our Z-score indicator. Everything that I use on any given day is right here in front of me. And it's not that hard to follow. Now, why have we been saying don't get too excited about what's going on with Bitcoin until there's something to be excited about? Let's start with the basics, because I think we got to dial it back in this crazy time we live in. What's this tell us? There's our sell signal. We can argue all day long if we could have got in earlier. Sure, we could have. But there's your signal. At any point in time, has this chart indicated that it's bullish? No. And no, this big green candle is not an indication of bullishness. This big green candle is actually bearish, in my opinion, because all it did was wick the 5 EMA, which is the lower part of the channel that we use as a filter, and then it ran away. So this is still open, diverged, open, down and to the right, which tells us we're still bearish. Chart's telling us that. What does this look like? A little failed breakout maybe forming? It's hard to say. These could be forming higher lows too, right? We don't know yet. So what do? Just drop down to the 4 hour and it'll give you an idea. Because what you're doing is you're opening up that candle, the daily candle, and you're looking inside, right? And that's basically a fractal look. Multiple time frames. The 4 hours, you can see, is still pretty tight here. So it hasn't really made up its mind. It's given us a little indication, and this is still a bearish trend, but you can see the zone, or the range rather, that it's been trading in, and we're kind of in the middle of it. So we're waiting for a breakout or a breakdown, essentially. Now, just like we looked back, let's look forward. And I think you really need to look at weekly charts to make sure that you're catching trend, because there's a heck of a lot of noise, right? In these daily charts. Now, the weekly, what's it tell us? There was our sell way up here. Are we trading below the T line in the 5 EMA? Yes. Are we diverged down and to the right? Open down and to the right? Yeah. This was just a failed breakout, took out the previous wave's lows, and went on and is looking for anyone past price. Right? Current price is looking for past price. Coming back to where we said it was going to come back to all along. When you told your when you told your friends and you heard some crazy guy tell you that you were going to come back into the 50s and low 60s, they thought you were bananas. And then, hey, there you are. Simply because current price is looking for past price, and the chart is telling us what it's doing, right? That's a downtrend. Don't get excited about these. This is just a slight retracement higher in a further downtrend. Just like, these were retracements lower in an uptrend. And was there just one of these? No. Should we expect just one of them here? Probably not. This has the potential to get really ugly. Right? So, do I still feel we might come back into here? Yeah. Chart's going to tell us, but this is a draw for price, and this wick leaving itself exposed like that just in all likelihood will come back and get tagged. And the problem is if you break this level, look to the right, you have these big volume gaps. And those volume gaps do what to price? Drop it like a stone in this case, because the move was down. Now, when the move was up, right, there was nothing to get in our way over here. So if you're looking kind of to the left of center, this move and this move here, these created big gaps, volume gaps in price. That's what this is. And you fall into it, it's going to get really tricky. So in the meantime, you better hope that this sticks, if you're long. So is this chart giving you a buy signal anywhere in here? No, not on the weekly. So you can see where this is going. And what was price looking for in here? Does anyone remember? Yep. How about the 200-day? So when everyone said, you're nuts because, hey, this level is crazy talk. Is it? Is the 200-day moving average really that such a crazy thing to see? No. Not at all. And that's what's down here. Current price is looking for past price. Break one level, find the next level. Right? Let's go through it. There's your 20. So we got a sell signal before we broke the 20. There's your 50. That's the next level. There's the 200. And what's in between there? Obviously, the 100 weekly. Remember that? How boring was it to listen to me tell you not to get ahead of your skis in here as much as you wanted to go long? probably irritated the heck out of you. But this is why, right? Because I'm looking at the chart, not what I want to do with my money. The chart will give me an idea very clearly what to do with the money, right? But don't let your brain get in the way of the logic that the market is telling you. This is a language, remember that. This is the market saying, hey, dude, we're still bearish here. And if you haven't noticed, this divergence at these major moving averages are an indication of momentum, and that you're likely not going to hold at these levels. We were being told. But it's all you had to do was listen, right? You had to do what you were told. And if you didn't, or if you got off track or off strategy, off plan, and all of a sudden you start looking at 15-minute charts because you're trying to find opportunity and something to do, and you're like, wow, I can long I'm just making this up, but I can long the 15-minute. Yeah, you can, but remember something. These are the weekly candles you're trying to long in. Does that sound like a good use of your time? No, it's not. So don't when the trend is obvious like this, don't all of a sudden think you're going to catch a bottom somewhere. It's really, really, really hard to do, especially if you're trading with any leverage, right? So just let the market come to you. Wait for your appropriate confirmations on the time frame that you want to trade on, and stick to them. Right? But if you're trading off a daily, or you want to be trading off a daily, and then all of a sudden you find yourself making decisions on uber short time frames, well, just close the damn thing before you hurt yourself any more than you probably already have. Right? You don't have to be a victim of the market. The market is consistently repeating itself on what it's doing, how it treats support and resistance when it approaches it, all of that stuff. It shows us time and time and time again, but for some reason, people seem to think that they know more. This is a case in point. This is your ETH chart, the daily chart. Now, how many people are trying to long in here, right? Just relax. When you're banging resistance and not going anywhere, just chill out. Let the market tell you that it's moving in the direction that you want. Like, why are you trying to long these candles? I know some of you were doing it. What are you doing? That's all resistance. You don't have to do this to yourselves, right? Because that's why. Why do you wait? This is why. Right? You're playing hangman with your own money. You don't have to do that. And then these candles here, what do? Well, they just get you all excited again because you stop falling and you think, okay, this is a base. Right? And then you get dealt with that. Bill breakout. All of this diverged, open, down, and to the right, which tells you the trend is still intact. One of the biggest challenges I had in doing this was trying not to reinvent the wheel. I spent a lot of time trying. I really did. Right? Thinking that I was going to discover something that maybe nobody else knew. I don't know. You know what? Is that going to be my fate? Probably not. I'm not that smart. But I'm smart enough to realize what does work. At least for me. So, step back. Recognize the things that are working for you or have worked in the past, and do that. And it doesn't matter that it's not sexy. Look at some of these crypto charts. You can't even tell that we flipped them, right? Because they look the same. If the chart's telling you that you're still okay, then you're still okay. Let's look at this daily Aster chart. Now, you could have got in the 4 hour. We talked about this last week, right? Let's see if we drop to a 12, if we get a volume profile. There we go. So on that daily chart, you were holding the T line. What's the T line on that 12 hour? It's this 20. Everything is fractal, right? So basically when you drop down to the 12 hour, you're basically opening up that daily candle and it's looking at those two halves inside there. That's what the 12 hour is. That's all it is. But these shorter time frames do tell us maybe what's coming around the corner. Have we produced a sell signal on the 12 hour? No, we haven't, but we're probably not all that far away. We're not that we're trying to predict. What I want to point out though is that you have a first touch of some of the 20-day here on the 12 hour. And those first touches typically will bounce, right? So that's kind of what I would pay attention to here, is to see what happens at the 20 MA with the first touch of price on Aster's 12 hour. But if you're already in the trade from down here, you have a couple choices. Do I hold the trade because it is still on the daily a bullish trend, right? You did wick the T line and kind of bounced a little bit. That's encouraging. Didn't just melt. And then you do have the support on the daily of some major moving averages. Now we can get a little more creative too, because what do we believe in? Fibs, fractals, and filters. So let's take the swing low, swing high, and what do we get? First thing you're going to look for is 50%, and then 618. Right? 50%'s here, and then 618 is down here. So why are we doing this? Well, if we fail, and this does prove to be the swing high, you already know what your downside risk is. Right? So you're looking to hold here, but if you fail, and this is that swing high, well, you already understand well in advance what these levels may be. So 618 brings us right back to that 54 and change, right down here. And what does that represent? That represents a substantial level of past price. That's what it would be drawn to. Right? But it has the support of some daily MAs. Fibs, fractals, and filters. Just multiple time frames. Over and over and over again. Now, and the problem with this stuff is, and I always worry about it, is that it's repetitive and could be perceived as boring. I get it, right? But success isn't boring, right? If keeping it simple is a fast track to success, well, that shouldn't be boring. It shouldn't. So now we're looking at gold. And a couple things to notice on our daily chart. This is, today anyways, is producing this sell signal. Now, we could have argued that that was the top, but I don't think you see the point here, right? This is a failure of the 20 as well. So if we end up failing here, and this does start to pull back, is this a critical level, right? Because all of this is really about, when I say levels, keep in mind, they're levels of money, levels of volume, condensed or otherwise. All of that stuff. They're just levels. So this upper value range is just simply one of those levels that's on the volume profile. So if we fail that level, upper value range, and we fall into this gap, does that put the 50-day moving average in play? Yeah, for sure. Right? Because, hey, not a lot to hold price up, right, when there's no volume there, and there's your 50 sitting in the middle of it, so that's reasonable to think that. Right? What else is a little interesting about the daily chart? The Z-score. So right here, on our sell candle today, we break the zero level. That's important. Right? One of the ways that we trade the z-score is based off of whether or not the z-score level is above or below 0. So when you have a red candle like this, ours just is producing a sell signal on our script, but when you have a red candle like this and the z-score breaks 0, that is an incredibly powerful move up or down. You get a buy signal and break 0, same thing, but this is a sell to break it to the downside. Now, do I trade my own methodology? Of course I do. Right? So, and I find this incredibly effective. Our script produces the signal while the z-score breaks 0. That's a high percentage trade that usually is quite successful. Now, again, we have no idea what comes after the current candle, right? Something could drop, and before you know it, it's going the other way. But at this point, we can only trade what's in front of us. So I very much pay attention to when our signals are produced and when we break the 0 level. Okay, now keep in mind, all of this is fractal. So of course, on the daily, we have a break of that z-score level 0, but not on the weekly, right? Like on the weekly, you are still incredibly strong. This red candle, although it looks terrible on the daily chart, and mind you, it's only one day of trading this week, but I mean, hasn't tagged the T-line yet. These ones did. These did. This one has not at the moment. So you know, we got to give it a little bit of flex, right? But the challenge is staying out of this gap. Whether it's on the daily, the 5-minute, the 15-minute, or the weekly chart, you know, if you're long, you want this gap to be avoided. And you want the relative strength to stay in the asset. So is it dropping a little bit? Yes. Sure, a little bit. This is 2 standard deviations, and it was obviously extended. But it hasn't broken 0. But we're not measuring price, right? We're measuring relative strength. We're measuring price up here. And what you're looking at here, by the way, is a go-no-go oscillator that's been built on the basic mechanics of our script, but it does not have all of the trade management stuff inside of it. But it's showing as an oscillator. That's what that is. So this is my entire suite right here, right in front of us. So that's gold. So gold, weekly chart, it's still bullish, and I put the ish part in quotes, is all we want to do, trade above, support, and in this case, the T-line and the 5 EMA. That's our filter, fibs, fractals, filters. Right. So this will be interesting. You can see you're getting a little bit of toppiness, but we're not here to predict what tomorrow's going to bring, right? We can only deal with what we're looking at. Still a bullish weekly, daily, breaking down a touch. But the downside risk is clearly defined. And part of this is about defining that risk for yourself. Doesn't matter what you're trading, right? And to have, before you even enter the trade, understand where you're getting out, have those levels set, have a stop set. No, it doesn't take that much longer. At least get the stops in. Right? At least do that. Now, there's always an anomaly, right? Everything's down. There's always something that's up. Today, it's Monero. But do we get excited yet? Not really. But I'll tell you when I will. If this was something that I wanted to trade, I'd be looking at my z-score indicator breaking 0. Let me see if this blows up and shows okay. Yeah, right, there's the 0 level. So what I'm looking for is the z-score to break 0 while I'm getting, and when I get, a buy signal. That's it. And we just go time frame by time frame. Right? That's all we're doing. Time frame by time frame. When does this move really get active? When the z-score breaks 0. Where's the impulse move up? Boom. Right here. In this case, just a touch above it. Works on every time frame you're going to look at. It's all fractal. And it's comparing everything that you're looking at. So this is the benchmark to the SPY, XOK. We're looking at XMR, the Bitcoin ETF, and gold. And it's giving us a comparison on all of that. And it does it on every asset you look at. Solana will be very much the same. So compared to the SPY, these ETFs, Solana is the worst performer. So why would, if we're trading long, why would we want to trade that? We don't. We want to trade the one that has the highest probability of moving in the direction that we want. And it's not Solana. Right? Comparatively, if we're looking at crypto, it's not even Monero actually, and all that other stuff. And this move, notice anything? This is all open still. And as long as it's open, I'm not interested in going long. And we talked about this last week. Don't be going long. Let's see if I can find a nice clean chart. Here. I don't want you to be longing these candles. Right? Just don't bother. But what does this mean? This means you actually have to look at the daily chart or the weekly chart, and not a lot are doing it because you're so worried about the small time frames. In the meantime, you're literally trying to long in a you-know-what storm of selling. It's not a high probability trade. Trade the stuff that's the strongest all the time. Right? In this case, look what happens at resistance. Is this the first touch of the 100 MA, which is here, and this is BNB. Doesn't matter what it is. First touch? Yep. What happened? Failed. First touches have a higher probability of failing on the way up, or if it was coming down, bouncing. This is a perfect example. But we know these things. But yet when you get into the guts and the foxhole of the trade, you're not following them. Some aren't. But you have to slow down and long enough to pay attention and collect yourself so that you can think. And you don't want to be having to do the thinking in the midst of the trade or as you're opening the trade. You don't want to have to do any of that at that point. It should already be done. In other words, you're running a system. Right? You take a percentage at certain ROI. You take another percentage at the next ROI, and so on. And you have control over what those levels are. But get in the habit of taking that money and sticking to your plan. Set your stop. If you get stopped out, so what? It's okay. The only time it's going to be an issue for you is if you're taking on too much leverage and trading at small time frame and you're driving yourself crazy. That's the only time that's a problem. Right? What do you think is happening to these major markets? Maybe let's look at the cues. Right? Is this a bullish chart? No. Do you notice what happened on the Z-score? The price? As soon as the Z-score indicator breaks, so does everything else. And then a candle or two later, hey, guess what? We have a confirmation. So the story you're going to tell your grandkids, is it that, oh, you actually sold off and then shorted here or here? By that time, you're totally going to forget. But you're going to be enamored with the story that you tell, that the trade worked out and it was one of the best trades you ever made. I don't know. Just do what you're told. And, the universe will figure all that stuff out. Take the noise off the daily chart and go to the weekly. Is this a bullish or bearish chart? It's not bullish. So these weekly charts, they say the same type of things that the shorter ones say, right? Like fail one level, find the next level. Do you remember when we were talking about Bitcoin? About failing the level at the top and finding the next level? And if that didn't stick, and if money didn't come in, the price would continue to fall and repeat that process? And lo and behold, it did. And it doesn't have to go all the way to your target. If money comes in and changes the direction of price, that's okay. Right? You're not, this isn't like reading tarot cards. A lot of this stuff there's just no control over. Just take your money and go. That's all. But this is still a bearish chart. Are we open? I'm sorry, I'm going to blow this up a little bit here. So the T line and the 5 EMA, was it open, diverged down and to the right? Yes. So what do you think the probability was of price holding up at that level? Not great. Because that's an expression of momentum. So this, to date, this little green candle here, bullish or bearish? Well, someone's going to say, well, it's green, so it's bullish. Well, I guess that's one way to look at it. But when I interpret that, this little candle so far has not even tested the 5 EMA. It hasn't even tested the T line, or the 20, which is basically right above it. And it doesn't seem, at least today, to be prepared to push higher to fill that gap, to do just exactly what I said. It hasn't done that yet. So that, to me, is not a bullish candle. That's a bearish candle. Does it look more bearish now? Yeah. This is the power of the volume profile. Doesn't matter what you look at. Do not ignore whether price is moving up or down, but do not ignore these gaps, right? Because you could do so at your own demise. They're also great to monetize when they work out as well. But you want to see something else again. Here's your Z-score indicator. Breaking zero. And then it all starts to melt down. And what is this telling us? This is telling us that the relative strength has been lost. The energy, the interest, the excitement, the exuberance, whatever you want to call it, that kept price moving higher, just didn't have enough gas to continue, right? And that's normal, right? You can't sprint to your destination constantly. Sometimes you got to take a break, right? And, that's what's happening here. The relative strength is coming out of this asset, and it's demonstrating that actually it's a bit exhausted. This is 2 standard deviations below, so that's a bit of a dip, right? But there's not a lot of relative strength there. This is the weekly chart. So does that increase or decrease the probability of price moving higher? Well, it certainly makes it more challenging, right? Because you need this kind of interest to make price do this. This kind of relative strength to make price do this. And right now, that's not what we have. Now, is this going to be an extension move up? I don't know. We'll see. I think that this is just, for some reason, just feels really kind of gross. And I think everybody knows what we mean by that, right? It just, this market's on thin ice. It won't take much to upset the apple cart. Now, markets are closed. What happened today? At the end of the day, nothing. Right? This is the NASDAQ. Let me go to SPY. Nothing really happened today. So all the volatility today, so that big reach this morning on SPY, this is why you're looking at the daily chart, is all that did was wick the 5 EMA. Now, every week we talk about the levels that price will test or kind of needs to break through in order to move higher. And when you're in the midst of a downtrend, this is the kind of test that you get. Where you get these, I'm just using SPY as an example, but these two candles wicked the 5 EMA and pulled back. Now, is it still holding a level of support? Sure. Not the first touch though, so we have to anticipate that every time we touch, we increase the probability or likelihood that we could fail. And that's what's happening here on SPY's daily with the 100 MA. This is the T line. We broke, the point of control, and we broke the point of control today and then closed literally right at it. But this is still a bearish chart. We have not changed trend. Testing the 5 EMA or testing the T line and pulling back to close well below is not bullish to me. So I think there's some work to be done here to figure out like what's happened. Prices come back to where it's been before. That's what the POC is, right? It's the most concentrated level. And that's what price has done, to close right at it. The benefit of having the 100 MA as support. But what happens if you don't break the POC and you don't bounce here and hold the 100 MA? Do you see this gap? Like everything we're looking at, whether it's crypto or something else, seems to have these kind of big gaps to the downside. Right? And this is just another example. And if we failed the 20 and we found the next level down, which was the 50, which we broke, did we find the 100 again? Yes. And if we break it, we look for the next level down, and that puts the 200 in play. Time, price come together, and they will meet. But this is key on SPY. If you fail the 100, you know, some people may not be interested in that as an average, but it's often quite effective. If you fail it, you're just going to look for the next level down. Or, hey, here's a little bench, right? This is a volume shelf. Maybe you'll want to sit on there. We'll see, but this is the risk to the downside. Don't hold, fall into the gap, put the 200 in play. And by the way, is coming back to the 200 on the daily some kind of unique phenomenon? No, not at all. It's completely normal. Completely normal. This is the ebb and flow of money. Eventually, they will find each other again, and here we are. But for some reason, people have this allergy to the thought that price has the potential to move down. So, you know, conduct yourself accordingly. But you can't say that you didn't see what was out there. This is the daily oil chart. I'm going to use West Texas because it allows me to use the volume profile. But I want to point something out. What just happened today? Breaking the Z-score level. produced your sell signal, actually on this little candle here, had a bit of a snap back up, but it actually didn't break the trend, and then boom, here we go. That's failed. Let's look at the two equal tops, right? This is the flush that we talk about all the time, right? This candle probably stopped a lot of people out. The next one opens, these two equal tops, boom. Here we go again. So if we break the z-score level of 0 while under a sell signal with our filter diverged open down and to the right, well, that's bearish, correct? Yeah. So does that not put the next level in play, which is the 50 and the 100 MA, which are twisting together? Yeah, that's an area of confluence, right? That's what that is. So does that increase the probability of maybe price finding these levels? I think so. I think so. This was a gallon effort, a nice trade for some people, but it wasn't the one that was going to change the world yet. Right? Eventually the energy trade will be the place to be, but I mean, I don't think this has done anything to change direction. Very interested to see, however, what happens when it gets back here. If you bounce, right, because is this not the first touch of these levels since breaking through? Yes, it would be. So I'm very interested to see how price reacts here. So in the meantime, you have choices. You do nothing. You may be short to that level, and you could do that with confidence. You're under a sell signal. Z-score is broken 0, so that means you're losing relative strength. Makes sense. And we're going to see, let's go to Apple. Gotta love Apple, right? This thing's just a monster. Just a monster. All right, so here's the daily chart of Apple. Now, we talk about these big parabolic candles, and here we go, bounce to the T line, and then back again. So that's just really weird, right? Big move down, bounce up, right to the T line, and pull back. Have we seen that movie before? Yeah. Yeah. So apparently the stream is stopped on YouTube. I have no means of actually fixing that right now, so all of these are recorded anyways, so don't worry, it'll get up there. But I apologize if you were watching there and it froze, so I don't know why, but I'm going to carry on. So Apple, here we are again, big move down, the snapback. What happens? Wick the T line, pull back and close below these levels. That is not bullish, right? That has to continue on in order to change the trend. NVIDIA, here we go. Very similar looking chart, really. Still closed below the 20, the T line, the 5 EMA. This is a very noisy chart actually lately, right? Does that make you nervous? Let's look at it on a weekly. We really haven't gone anywhere in quite a while, have we? Doesn't mean that we're not taking a deep breath and the thing is going to try and run, but you really want to be able to see price break through. What you see up here is the upper value range. If you're going to create a new zone, you have to break through there. And there seems to be an unwillingness at this point anyways, for now, for that to happen. And I'm using the weekly because it just takes out a lot of noise. Right? A lot of noise. A couple other charts I want to look at real quick too. One is MasterCard, and the other one is Visa. So we're going to look at MasterCard first. And this is the weekly chart. Not unlike the NVIDIA, just kind of went sideways for a while, didn't really break out. But what do you know? All of this sideways going nowhere price up here. The interesting part is, or that what you should find interesting, is that what you're seeing down here is there's no relative strength. So if there's no relative strength, again, there's no interest, exuberance, whatever you want to call it to make yourself understand what's driving it. If you don't have it, it's difficult for price to move higher. Right now, this is not a measurement of price, obviously. But if you don't have momentum, you don't have interest, exuberance, people that want your stuff, as in your stock, it makes it hard for price to go up. So as you challenge these levels with no relative strength, does it make the probability of holding them higher or lower? A lot lower. You're more inclined to move higher and bounce when you have the relative strength to support the move. But when you don't have the relative strength to support the move, this is what happens, or can happen, right? So this weekly, hey, price moves down, retracement higher, downtrend continues, you could get a retracement higher, and the beat goes on, right? And that's why this gets hard. It's because it's not one big giant candle up or down, right? It's the ebb and flow of money. Our job is just to follow the chart. This is a weekly chart, so these are very tradable moves. Very tradable moves. But have we broken one level and found the next level for the last three? Yeah. But there was no relative strength to help us. Thus, it just made the conclusion that much more likely. Now, as we break in here, what do you see? Another big volume gap, and the 200-day moving average on the weekly chart positioning itself basically right at the next shelf. And how was this big volume gap created to the right in here? Over here. So this big move here, that was extremely well organized, right? Just price marching up the T line and the 5 EMA. Well, that nice organized move created this volume gap. And now we have to test it. Perhaps, right? That's what you're trying to do here. You're trying to stay above this current level. Because if you fall into the gap, it puts this level in play. And that's the 200. So, nice green candle this week so far. But what has it done? Well, it tested the 100-day moving average on the weekly and failed. Pulled back, right? Hasn't even tested the T-line or the 5 EMA. Not necessarily a sign of strength. That's how I would look at that. Look at Visa's chart. Did you know I even changed the chart? It almost looks the same. So here, again, I want you to notice no relative strength. And if there's no relative strength and you're kind of testing to the downside levels, well, without that relative strength, it just makes it that much more difficult for price to hold. Unlike over here, where you have lots of it, and it makes it easy for price to march higher. Right? Even on these big moves down, because you have that relative strength in your corner, you're more likely to get these bounces. This one just wicked the 50 and boom. That's why we buy at the 50, right? Have open orders at the 50 if you're going to go long. That's just saying. But nevertheless, if you don't hold this level, you're going to find the next level down. Same deal. The 200 MA is right on the shelf. Divergence open down and to the right makes it difficult for this to hold. Right? You'd have to get a lot of money to come in and start to change the direction of those shorter term averages. And it's doable. It's not like it's impossible. It's very doable. It just takes time and it just takes money. let's look at Microsoft, because we've been well focused on this one for a while, and pretty darn good too, aren't we? These funky wicks at the top here, I'm sure I'm not the only person in the world that noticed those, obviously, and they were just strange. So when it doesn't feel right, it doesn't feel right, and you walk away. And the problem is a little bit of a tell, not a problem, it's a tell. As soon as you lose this relative strength, when you create this top, right, when you create this second top, if you create that second top, let me just move the chart over like this a bit, with no relative strength, more or less likely to move higher. Right. Obviously, a lot less. When you've got the relative strength in your corner, as you can see in the bottom right, and price moves higher with velocity, right? And what is that? That's outperformance. That's what you want to focus on. And it doesn't matter what you're trading. You know, you could be trading Bitcoin, ETH, and alt, stocks, commodities. What you're looking for is outperformance. But right now, that's not what we have, is it? We have underperformance, no relative strength compared to the rest of the market. Do we know why the market feels like this? Well, we might have, you know, I guess, I have thoughts, but not really relevant. The only thing that matters is what you see on the chart. And I know that we often look at these charts in hindsight, right, after they've already materialized. Well, you know, if we look at this, you know, there's that other funky wick. There's your sell signal. So on this candle here, as you can see, your T-line and 5 EMA are diverged down and to the right. And as you approach these levels, right, now some are going to say, oh, there's the candle that's finding support at the 50. Is it? Are you sure? Or is there maybe something else going on? There was something else going on. Now, this is where a lot of us could make mistakes, and I know I used to be one of them, right? I'd make a lot less mistakes now. But, you know, I would probably try and buy those candles long many a time. And get sand kicked in my face all the time. But now I don't have to do that. I don't have to make that mistake. I can see the divergences down and to the right. I don't care. It's going to take time. I understand and respect the time that it takes for these moves to materialize. But this divergence within our filter down and to the right was telling us that at some point, as long as that was open, price will fail that level. And that's what it did. It took it time doing it, but it did it. And here we are today. This is the point of control on the volume profile, and we've broken that. That's the place where, you know, you would hope that price would sit down and take a rest from this. But so far, it hasn't done that. And what have we talked about breaking the POC, falling into this gap? And then there's your 200. So you have time and price looking to connect in an area where there isn't a lot to hold price up with no relative strength to speak of. This level is still diverged open down and to the right, so you're still bearish. Right? Still bearish. And compared to the SPY, it's underperforming by, you know, over negative 16%. According to the Z-score dashboard, the only thing we should be trading is gold on this time frame. And although gold broke down a little bit today on this time frame, it's still the better trade. Why is this important? Because somewhere out there, there's somebody trying to long this chart. And we don't want it to be you, right? We want, if you're not trading the strongest asset possible, you've already made a mistake. Think of it like that. Well, you're going to say, well, I own this, I'm really into this project, or I really like this stock, or whatever. So what? So what? I don't care. You still want to trade it? Do you still want to trade it? I don't know. This is an advertising agency. Maybe it's your favorite advertising agency network in the planet. But the chart's telling me, and my dashboard's telling me, that it's an underperformer on this time frame compared to all the other assets we're comparing against. The SPY Gold, XLF, XLK, and the Bitcoin ETF. It's almost the worst performer. So why would I want to trade it long? Well, and don't let the answer be because you want to buy it low. Well, I just told you this isn't the low, in my opinion, on this. So chill out, relax, acknowledge what you see on the chart. Here's Walmart. Is Walmart running like a house on fire? Yeah, absolutely is. Now, even when it lost a little bit of relative strength, it didn't break down, right? At all. But at some point in time, will price want to come back and check these levels? Yeah. Time and price will find a way to find each other. And we've shown this on every asset that we look at each and every week, twice a week, where things that we don't expect to pull back, pull back. It's just how things go. Here's Google, the weekly chart. What's Google hanging on to? The 20 MA. Got a sell signal this week. So today's price action was able to produce a sell signal. But this is the first touch of the 20-day moving average since price broke through it over here. And those first touches typically find support, right? And when I say that, I don't want you to think each and every time they find support. No, that's not what I said. Typically, they find support. Typically. And when they don't, is there a message for you to take away there? Yes, absolutely. And what makes this one very interesting for me, and this is the benefit of using this setup, in my opinion, is that here you have price sitting on the 20 on a weekly chart, which is its first touch. We would anticipate the support, like we said. However, the Z-score is about to break through zero. It hasn't quite done it yet, but the break of the zero level on the Z-score and the signals that produce from our indicator line up very close. They're either on the same day or same candle rather, or one or so either side of it. And because it's not just price confirming price here, I find it much more of a respectable validation, especially on longer term charts. So if we do break down below zero and get a meaningful push or loss of relative strength as we've formed this signal, I think we break the upper value range to the downside. That's what I would anticipate happening, and then we start looking for the 50. So, and then this is all light trading, right, with these big gaps in it. So, and this candle today, by the way, it's got to come back and test up here before it can even begin to change this trend. And that's a lot. We could bounce here a little bit this week, but you have to understand what the downside risk is, right? And once you start using relative strength, you'll start to appreciate what it means for the safety of your trades. So break zero, that's great confirmation. Our buy signal went off quite early here, right? So we trust our chart. we'd be trusting this signal. And do you notice kind of where all this breaks? I'm just going to blow this up a bit so you get the 20, 50, and the 100 AMA in there. That's confluence, right? So you've got all of these areas converging together like this, and price breaks through. That's a confluence level. That's why those areas are so important where you have the twisting, because they make the breakout and the breakdowns much more impactful when they happen. All right, so you had a great move up, the slingshot move, coming back to a first touch. Keep your eye on the Z-score level to see if it holds and if it starts to print red. The amber stuff isn't usually too scary, right? But the red stuff is. So we'll see what happens here. Just know that current price revisits past price. Not when you want it to, but when it wants to. Let's look at our friend, just because. Strategy. Right? Here we are, breaking levels, right? Breaking one level, finding the next level. So, you have your break of your Z-score right in this case, right at the top on the weekly chart. Here a couple weeks later, you produce your sell signal, break one level, find the next, break that level, find the next, break that level, find the next. Open, down, diverged, and to the right. As you approach those levels expecting support, chances are that's not going to happen. The power of the volume gap. What happens if price falls into it? Well, here's a great example. And remember this from ages ago when we first broke down, said this is where we want to go in all likelihood. Why? Because it is the bench of past price. And we've really kind of exceeded that level. And you're holding this wick, this tagged the lower value range, which is basically the last line of defense, because if you break that, you're back into this range again. And I want to pay attention. See back here? No one's going to talk about February 2024. No one. But this February 2024 level, right here, is, in my opinion, probably where you're going to come back to. It's not financial advice or anything like that, but what it did is it created these big parabolic candles like in here. And what did that do? It created this volume gap below the lower value range. So keep a very close eye on this weekly chart, because I have a feeling that this comes back to haunt this thing. Any of these moves that do this, that create these gaps, can come back to haunt you if you don't have the momentum to continue higher to avoid revisiting them. But this one can be really interesting. So let's keep our focus on that. Just look when you're free falling, just kind of close your chart, condense your chart a bit, and look left, and you'll see right where price may want to go. Right, you will find it, or it will find you. Right? Just be there and ready for it. I'm looking for something, and of course I can't find it. Right. So this is Nugget. It's the it is a weekly chart of the 2x leveraged ETF, but bullish. Right. So these are the things that move like liquid lightning, and you don't want to be on the wrong side of, because there's a lot of erosion. But was it worthwhile trading this thing? Yeah, it was. Right. But the reason I want to show it to you is because, unlike the regular gold chart, you don't necessarily have the convenience of time to think about what you're going to do next, because of the erosion, because of what you pay for that little bit of leverage. So, I think even when you buy them, it might even be a little warning saying, hey, You don't want to be in these long-term, they're not meant to be long-term trading instruments, and that's because of those other things. However, so if you're trading this stuff and you're on the wrong side of it, the time is not your friend. Right? So this is not a situation like on the other gold chart where we had this big, drop down. Don't let that happen to you on these leverage things. Okay, this is still a bullish chart. This is the miners, by the way, not actual gold, but still a very bullish chart. You just don't want to let yourself eat these. You don't want to eat these things when you're when you're leveraged. So don't hang around for them. Okay. What else can we look at really quick? CBRE. It's not something that I trade. But what does the chart tell us? Chart tells us something's going on, right? That was the weekly. Here's the daily. Obviously had to do with earnings, right? So what does this illustrate? Does it illustrate the danger of trading around earnings? Yeah, absolutely. Right? Absolutely. You've heard the term the smart money. Well, the smart money is everybody that knows something that you don't, basically. And there's always somebody that knows more than the other guy. Now, obviously, the outlook wasn't good. But what did price do? Well, it broke these levels and found the next level. Like on these two daily candles, there's your close, right? And then the next level, the next day, here you are right again at the 200. Now, it didn't stick. But you can see what's going on the weekly now, can't you? It looks a lot more clear. And basically what's happened is we're looking for the 100 again, or still. Broke the 20, broke the 50. Okay, obviously closed below the 50. That's never good. This little doji so far is not giving me a vote of confidence, or at least in any reason for me to give it a vote of confidence. It looks weak. This wick is completely exposed. And look at the gap. And by the way, there's no relative strength to help you move higher, like you had here, or even here. You don't have that right now. And it puts all that stuff to the downside in play. Now, for 15 years, for the most part, with the little speed bump here and there, the market's gone nowhere but up. And the reason I'm showing you some of these charts is that you can start to get an idea of what the downside risk on some of these things actually is. Whether it be indexes or, let's look at the SPY, right? We know how price behaves. So let's not pretend that we can't see things that we see on every other time frame, on every other thing we trade. You have to be aware of the downside risk. And trade, obviously trade what's in front of you. But do not turn a blind eye to what you're being told on the chart. Break one level, find the next. Don't hold. You're going to break that level and you're going to find the next. This is just a simple matter of layering knowledge. All right, it's not that complicated. It really isn't. So, again, the everything that you're seeing here on the chart is what I use every single day. And I'm not doing anything that I don't show you guys, really, right? Like this is basically it. Whether it's Bitcoin or whether it's stocks, nobody's holding back, right? We're showing you exactly what we're doing as we're doing it. One just simple thing at a time, right? Handful of rules. Right? This oscillator, go no go, I think is great for those that don't necessarily, if you don't want the trade management, all that stuff inside the signals indicator. you'll still find this really helpful. It's still geared essentially the same way. The Z-score is a massive, 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 for me, difference maker, because it's keeping me out of crap. It's really keeping me out of the junk, especially like when you get into shorter time frames. So when you see price doing this and Z-score doing this, I'm not really, there's nothing there for me. So I don't even take the trades. Right? I'm just filtering out all that stuff. What I'm looking for are these movements where you have the pushes past 2 standard deviations. This one happens to go almost 3.5 on this 4-hour chart. Right? So I know that that's an extreme level. It's a bit of an anomaly. Price starts to fade, but where does it get really interesting? When you break zero. Right? So this is not reading price, it's just reading the energy, the exuberance, the relative strength inside the asset on that time frame compared to everything else. But when it breaks zero, it ain't playing. So here's another example, right? You can see a little impulse up and then boom, big move down. This little push higher is what? It's just a test of the 200. This is no big deal, and it tests and fails, and then the next downtrend continues. Test and fail, test and fail. Looking to the 4-hour chart to get an insight onto the daily, that is, this trading below. Here was had a sell signal at what time? 11 a.m. today. So since 11 a.m., you could have been short. This wick may have stopped some people out, but if it did, what do we know? We know that as long as we're diverged open down and to the right, and we're under a sell signal, it's an opportunity to do what? Re-enter our trade. And if you're using your stops properly and you're mitigating your risk, and again, just use this. If you don't want to trade with leverage, there you go. You're just gonna trade spot. That's fine. It's still gonna have all of your levels on your chart. Whoops, I guess I should put them on, right? So this would be trading spot. Levels look pretty far away for you, don't they? Right? So it goes to show you just by adding a little bit of juice, what that does to monetizing the chart, but also how easy it is to use too much. Right? So stay out of the blender. Just to recap, slow down, slow way down. Write down your 5 symbols that you want to trade and focus on them. In however it is that you trade, whether you're using options, whether you're buying commons, whether you're trading crypto, whatever it is. Write them down and get to know them intimately. Focus on entries, again, letting the market come to you so that you get the entry that you need for your trade setup. And pay attention to the longer time frames. So if you're only trading long, you're going to get frustrated in a down market, right? So personally, I don't want to be trying to long when price is doing this. And again, find the asset that is the strongest of the bunch so that you're always trading the most powerful. You're trading a leader and not a lagger. You don't want the laggards. You don't want to be the one dragging around somebody else's stock while it mooches off the strong. Just ride the strong. Right? Or in a down market, ride the least or the best of the worst, I should say. Because there's going to come a time when nothing feels like it's going up, so you're trying to lose the least. That's also a reality. Okay? Don't get fancy, don't take on too much leverage, and do what you're told. Study the longer time frames. Like today, for example, on SPY or SPX. With the wick. that's a range that you need to be prepared for, right? And if it's not within your risk threshold, then it's going to be problematic for you. So at the very least today, when I look at this chart, I'm going to go, okay, I would expect to get bounced around from this level here, and you actually went farther, right? But let's just say this level in here to this up in here. That would be my expectation, because that's kind of what the chart's laying out for us. And if my trade methodology is such that I can't withstand the elasticity of the move, maybe because you're too leveraged or whatever, then it's going to be a problem, right? And this stuff is moving really fast. So at the end of the day, you know, what was SPY up? 1.10. But you would have felt that it moved around, you know, 100 or 200 points because of the velocity of the moves. And this is the danger. Another thing that I'm going to do to pass on along is I try not to trade early in the morning at open. It's just a me thing. I'm sure there are others that feel that way too, but there just seems to be a lot of drama in the first hour and a bit, and it seems to take the market a little bit of time to calm down. And it's not just the stock market, it seems to do the same in the crypto market. Today, you know, this thing was down almost 3% at one time, Bitcoin was. But earlier, it actually looked like maybe it wanted to break out very early this morning. But the chart doesn't lie, right? It does tell us what it's doing. We just have to take the time to listen to it and appreciate that it's a language and respect the language, right? The chart's taking the time to tell us what it wants to do. We should at least take the time to interpret properly what it's telling us, right? And I think that's really the best advice we can give. Slow down, let the market come to you, take the time to listen, don't rush your trades, extend time frames, and drop your lev, and get in the habit, you know, using this trade management system or one of your own, of taking profit at regular intervals and setting your stop regularly and a trailer. And yeah, sometimes that pesky trailer is going to you know, check you out. That's okay, right? Because you checked in profits, which is going to be different from the previous you. But just slow down. That's all it is. Just, we know what to do. You know what to do most of the time. Just do that, and you'll be okay. We're going to come back on Thursday. I don't think I have a time change for Thursday, but if I do, I will tell you. But one thing I can say is that on Thursday, we will have a gentleman by the name of Dan Ushman join us. Dan is the president of TrendSpider, which is the company that has created this platform here, which I am a huge fan of. They're, you know, TradingView and TrendSpider are both good, but I am a huge fan of TrendSpider and becoming more of a fan all the time for different reasons. It's just a pleasure to, once you get your head around its potential and its power, it really is a pleasure to use it. So Dan is going to be joining us on Thursday. So I look forward to that, and I hope you are too. So on that cheery note, I'm going to let you guys go. Happy Tuesday. We will see you on Thursday, and we will see where price is on Thursday as well, because there's a lot going on. So buckle up and take care. We'll see everybody later. Bye for now.